Welcome back to ABG Investor Days. My name is Simon Jönsson, an equity analyst here at ABG, covering small cap tech and gaming. With us next we have G5 and the CFO, Stefan Wikstrand. Without further ado, I'll leave the floor to you, Stefan.
Thank you very much. Thank you very much. Nice to be back. It's a nice tradition this time of year. So my name is Stefan Wikstrand. I'm the CFO of G5 Entertainment. And G5 Entertainment, we're a developer and publisher of free-to-play games for tablet smartphones, but also for PCs. We've been around for a while, so the company is 21 years old today. We've been in mobile, well, essentially since, well, actually before the smartphones came and became the prevalent type of phone on the market. But you can see the revenue chart here. We kind of distinguish the mobile gaming market as it is today with the smartphones. We are focused on a female audience of women over 35, which is also a core audience that we've been focusing on since we went into mobile. A few words on the kind of development of the market over the years. So obviously we are primarily focused on the red area here, the mobile gaming market, which has grown rapidly. This is also the popularization and the monetization of casual games, whilst PC and console games usually are different in the sense of type of games and how they're built. Mobile is more about the casual gaming experience. And the popularization and the monetization of this has created the growth of mobile. Since this chart, since this development, we also start to see a spread between these kind of platforms in the sense, well, you probably heard that PC games, some of the popular PC games have been ported over to mobile devices and become very popular. But we also see that mobile games, casual games, are being played and paid for on PCs. So PC is actually, or the Windows Store is one of the bigger stores where we sell our games today. So another look at the kind of growth of the market. This is a previous estimation of the market growth for the coming years. If we look at 2022, you will see a nice and healthy growth for this year. This will likely not occur. We've seen weaker seasonality over the summer, so these numbers are being revised. We'll more likely see a kind of a flat, maybe a bit declining year. Let's see how the numbers will be revised when we get them. But we expect kind of a healthy growth going forward, that we bounce back to growth after kind of a middle year, which is the first gap year that the mobile gaming market has had in terms of growth. Asia is the biggest market, but we, as the majority of the kind of Western developers, primarily derive our revenue from North America and Europe, which you can see in the bottom right of the slide. Asia 9% today. If you back up a few years, we had more than 20% of our revenue coming from Asia. So Europe and Asia for us is moving a bit, but North America has been the dominant market essentially since forever, and for whatever reason, rest of the world is always 6%, and I can't really explain that part. If we look at G5's development, this is a bit more recent history than from 2009, but from 2014 when we moved over to the regulated market of Nasdaq. This is also coincides with us completing the transfer from premium games to free-to-play games in 2014 and 2015. We had a few successes earlier before 2014 in free-to-play, but this is where we kind of completed the transition over to only focus on free-to-play games. In 2016, we launched Hidden City, which is our biggest success so far. In 2017 and 2018, we spent a lot of time internally and revising our development department. We hired a lot more people. We changed the structure of the teams. We expanded the teams quite a lot to increase the quality of our own production of the games, which meant that we didn't release that many games in 2017, especially in 2018. But on the back of those investments, we started releasing games again in 2019 at a quicker pace. So you can see 5 games released in 2019 8 games in 2020 and so forth, whilst previously we did roughly 2 to 4 games per year. We also distinguish this when we do the revenue segmentation, which you will see later in the report. So games released from 2019 and onwards are classified as new generation of games. It's our own new generation of games. Games released before than the older games. And then we have the licensed games as well, but you will see that when we get to the revenue chart. So a higher pace, more games launched at a higher quality. Some successes. Jewels of Rome was one of the first of this batch of games that became very successful. Late in 2020, we released Sherlock, which currently is our biggest growth driver in the portfolio. If you see in 2022 there, you see another color, and also that there's only 2 new games released, which is related to what I hopefully will talk on. Oh yeah, we'll skip to this one. A slight change that we've done lately in the publishing strategy. So we've had this slide for quite a long time, which describes the revenue development of a free-to-play game. And the longevity of a free-to-play game is much longer than people usually expect. We see, for example, Secret Society that was launched in 2012 is still one of our biggest revenue drivers or revenue generators. Hidden City also grew very rapidly in the scaling phase. It reached peak revenue in 2018. You have a churn of revenue, but the curve tends to flatten out and the stickiness of the user base is very strong. You also, in that phase, you reduce or optimize your marketing spend. So the profitability of the games is much better. Why I connect this slide to the previous one is the first 2 steps here, which kind of describes what we've changed in the publishing strategy, which we announced in the Q3 report, is where where we previously came to kind of soft launch / scaling here. We released the games. We released all games in this phase, and we iterated on them in the market. We now will do more or less the same tests, but we will use them more for even stricter guidance in terms of if the games are going to global launch or if they're just going to be kind of early soft launch and retention tests. So we'll do more retention tests early with less content in the games. We'll test them, and then if they pass these benchmarks and proceed to the next level, we have some few iterations, and then they will go for global launch. That will mean that we will have fewer games in the market going forward, but hopefully then at better quality. Whilst previously we released all of them in soft launch and iterated from there. So a slight difference, but this slight difference meant that we needed to also change how we capitalize on the games, and also we needed to take a decision what we do on the games that we already had started development, which you will see when we get to the financials part of the presentation. So if I then back up and go back to the target audience, that is the same. We have women over 35, which is our target audience. It is still a growing demographic, less and less underserved. There's a lot of companies that know that it's a very healthy part of the mobile gaming market. But still, you have a lot of developers coming to the market and focus on the games that they want to play, not necessarily what the kind of the audience wants to play. It's a very loyal audience, so when you get them on board, they tend to play the games for a very long period of time. So we're talking, for some, of course, they only play for a few days, but if you get some of these users on board, they play for weeks, months, quarters, some years, and that is the part of the stickiness that I mentioned before. Some people play these games for years and years. They invest in the storyline, they invest in the type of game that they enjoy. It's like a never-ending soap opera, and those we've seen around for quite a while. And they enjoy playing these games. They enjoy the gaming experience that we bring, and they then tend to play for a very long period of time. And we can see that when we get to games that are a bit older, that you have a very loyal audience, they spend really well, they can react poorly to significant changes to the game. They want to play what they kind of signed up for. So our main categories of games are Hidden Object games is the biggest category of games we have. It has almost always been the biggest category of games. It is a more niche audience or niche genre. So not as big as, for example, Match 3, which was one of the biggest genres. But very lucrative. When you get players on board, you have a good gaming experience. They stay with the games once again for a very long period of time. It fits really well with our target audience. Some of the games we have, the best paying audience is actually women over 55. But broadly speaking, that's the target audience that we're aiming for, 35 plus. So yeah, very sticky, very graphic oriented. So it's very good graphics in the game, not very kind of action oriented. Still calming, relaxing, which is what the majority of our players are looking for. A relaxing experience to kind of disconnect. Match 3 is our second biggest category of games, here represented by Jewels of Rome. Match 3, huge genre, obviously, so we have a much smaller market share in the Match 3 space, but also very much, a large growth potential there. Mahjong is the Mahjong/solitaire is the third genre that we have. We sometimes refer to this as a bit of an evergreen genre. It's not necessarily, it's not huge. I think we're the biggest publisher of Mahjong games. A bit weaker in terms of KPIs, but people that like Mahjong games tend to stick with them for a very long period of time and keep coming back to the games. And I've said this before, for whatever reason, our Mahjong journey is a game that I come back to when I am on an airplane. For whatever reason, it fits there for me, and I come back to the game because it's a very enjoyable gaming experience. And then in the fourth category, we have the kind of new genres that we test, iterate, see if we can find a new success in a new or adjacent genre. Here, well, you have the word game that we released, and also you have a merge game, which is kind of related to the Match 3 genre, so adjacent and wordplays and new. All of these are connected with our social network that is built into the games. It's called the G5 Friends Network. And there people can socialize with each other. They can chat, they can befriend, they can help each other forward in the game. They can, of course, store their progress. It also allows for them to play cross-device. So you can play on your mobile phone, you come home, you move to your PC and play there, you can play on the web, etc. It also allows for us to kind of work with some additional tools when it comes to retention and re-engagement of the users. And we're adding more features here on an ongoing base. So we've added a form of kind of clans function, which is called unions in some of the games. So more features are being rolled out as well for the benefit of the gamer. I talked a bit about the publishing strategy before, that we have a slight revision there. That doesn't impact our overall strategy or that approach that we have, that we work with a portfolio of games. We will want to have multiple games in different stages. It creates stability in the business. So older games that are more mature, usually more profitable, then we can invest in new titles that emerge that will provide growth. So you can see here then the orange bar in the bottom there, which is the new generation of games that have seen very strong growth the last years, whilst the license primarily here has lost some revenue with the decline of Hidden City, but a very healthy situation. And in this case, also with improving margins, thanks to the gross margin improvement that we have between licensed and own games. If we then focus a bit on the new generation of games. So as I said, these are games that are released from 2019 and onwards. We get into a bit of a definition issue here with the 23 new titles. As I said, previously we released games in soft launch more on a kind of a global scale or with fully developed games, whilst now we switched the publishing strategy a bit. So it is a bit like comparing apples and pears, but we will live with that for now. Once again, we primarily invest in our main categories of games, Hidden Object and Match 3, and then Mahjong. And then we tend to release one, or going forward and testing, 1 to 2 games in a new or adjacent genre every year. The share of the revenue from these games have grown consistently since since 2019. And now Sherlock is being the best growth driver. Before that, Jewels of Rome was big. Some others of the Jewels of games have also performed really well. And then this is then combined with the user acquisition efficiency that we've improved the last years. Starting from 2019, going into 2020, we invested a lot in the marketing efforts of the company. Marketing is a hugely important part when it comes to mobile gaming. Given the size of the market, the amount of games that are being released, marketing is crucial to be seen in getting the downloads, and we've done a lot of improvements there, which has had effect on both the efficiency of the user acquisition, but also the profitability of the group. So a few words on the financials. So in Q2, Q3, this year, we've seen a bit slower market, as I said before, on the market development. Q2 and Q3 are usually a bit weaker in terms of seasonality. It's warmer. We primarily derive our revenue from the northern hemisphere. So during summer months, people are outdoors more. They play a bit less. Winter months, Q4 and Q1, tend to be a bit better. That has held true for years. That effect has been a bit smaller during COVID. People have been indoors more, and they've been a bit more isolated, so they played more consistently over the year. We expected when we went into this year and you started seeing reopening and normalization that we would see a rebound to kind of more normal seasonal effects. So Q2 and Q3 a bit weaker, and then stronger again in Q4 and Q1. We see this year that seasonality was a bit stronger than we and other players in the industry anticipated. Probably because you had normal seasonality and then you had the reopening. It was the first summer in years in the main markets such as the US, where people could travel freely. And we've seen a lot of reports on the news about how stacked the airports in the US was. What you see here on the revenue development for us, then, this is the SEK revenue development. As I said, we derive primarily our revenue from the US, so the USD is strengthened. So we still see growth in sequential growth here in SEK terms, but in the underlying currency, which is USD being our biggest currency, we certainly see a decline in Q2 and Q3. But it's a part of kind of going back to normal seasonal patterns and normalization after COVID. Sherlock has done really well. We continue to have very strong average spend in our games. So the MAGARPPU, which is the weirdest acronym, monthly average gross revenue per paying user, is a strong $61 per month. So the average user that actually spends in our game spends over $60 per month, which is very good. We see very good margin development. The gross margin continues to improve. You see a jump in Q3 2021, which is related to Microsoft Store lowering their store fees. But the trend is still there with the larger share of the portfolio being owned games, so we don't have to pay royalty on them. We see a very steady kind of increase in gross margin. In terms of EBIT margin, Q3 was very heavily impacted by some. We took a lot of write-downs in the portfolio due to this change in publishing strategy. So we cleared out all games that were not released from the balance sheet to kind of synchronize, what's going to happen in the future with the accounting. So that obviously impacted a lot. So we see a negative EBIT here of -22. Adjusted for write-offs, the EBIT margin would be a healthy 14% and FX, so around 50 million. We continue to have a very strong balance sheet. So we have a net cash position. We do our yearly dividends. We do buybacks ongoingly. So very kind of healthy position there. And with the change in how we capitalize and work with the new games, EBIT will actually even better reflect the cash generation that we have on an ongoing basis. And we have very good match between revenue and cost on an ongoing basis as well. So we convert cash really nicely, and EBIT will be an even better approximation for the cash flow going forward. So Wrapping it up, I think, G5 as a company, we've been around for quite a while. We continue to be a very kind of stable player in this industry. We're profitable. We've been for years. We're cash flow positive. We have a very strong balance sheet. We pay a dividend. We do buybacks. At the same time, we're kind of investing in the business at capacity. We have a workforce today of around 950 people that work on the new games. We have kind of fully stacked teams where we need them for the existing games, and we have the new development teams that takes new games to the market and gives us a shot for the future. We have a very positive development in the product mix, which you can see there with the new games or owned games in general are growing, taking a larger share of the portfolio. So we see increase in margins from the gross margin side. And then we have the upside potential, which is the beauty of mobile, that when you have a runaway hit, you have the disproportionate upside potential where you don't have to add cost to scale a new game, apart from marketing. But of course, that happens when you scale a game. But the kind of OpEx part of the business doesn't have to grow with the growing portfolio of games. So we essentially invest new games in marketing at capacity or as much as we can to kind of fuel the company, and at the same time we're profitable and cash flow generating. And I think that kind of was me. Nailed it. 17 minutes.
Yes, you did. Thank you, Stefan. We have time for some Q&A as well. So I want to start off with Sherlock, your biggest growth driver right now, at least. What is your plan to keep growing the game?
Well, I think for Sherlock, it has been growing for quite a while. Obviously the marketing team works really hard at kind of marketing, getting new users to the game. At the same time, the team that is responsible for the game, they're certainly fully funded and maybe even done some to kind of make sure that we have this kind of content treadmill going, that you have the monthly releases, updates that the user wants to have in the game to engage them. But also it, of course, then maximizes our revenue potential for the game. So I think it is a mix between having the team there to just give the game the best shot it can, and then marketing does their thing on their end, so to speak, to get new users in. And then where the game will go, we'll see. It's been a very steady growth driver for us, so growing kind of month to month consistently. So yeah, we'll see.
Is it still growing month over month?
Well, it did up until Q3. Q4 you will have to wait for.
All right. And what is your overall market outlook right now, in a broader sense? Q3 was in the broader market a weak quarter in terms of growth, 13% decline year over year, according to Sensor Tower at least. Do you think the growth rate could be better year over year in Q4?
I do, but not with kind of leaps and bounds. I think at least we saw some trends that it wasn't, we had some reopening effects late Q4 as well, especially over Christmas, New Year's holidays. Whilst they can be very strong, kind of sending off the Q4 with a kind of really strong end. Maybe that has normalized a bit this year as we've kind of gotten into this kind of reopening phase. But yeah, I think it's certainly not by leaps and bounds. It is still a bit of a sluggish market. I think we see some macro effects coming into play. I think summer quarters were more related to kind of reopening. We probably see a bit macro impacting us, but on the other hand, you have positive seasonality, which we kind of expect to come back. So it is a mixed bag. It's not easy, and I think you see that as well when we look at the forecast for Q4 from kind of other market participants, that they deviate a bit, and it's a bit unclear on where we're going.
All right. And a last one from me on ad revenues. Still kind of an untapped opportunity for you, I think. It's around 1 or 2% or something of sales.
Round
I think.
1, yeah.
Quite low compared to competitors. What could the optimal share between in-app purchases and ad revenues be for you, looking 3 to 5 years ahead?
Well, we certainly want to see the ad revenue growing, but as we said before, we don't. You see a lot of companies kind of that have the same type of games that we do, not the kind of purely ad-driven games, but more kind of targeted towards in-app purchase, casual, same target audience. That it's not uncommon that you see 15 to 20%. We're very focused on the in-app purchase part of the games. So as we said before, first target was to get to 3, then kind of maybe moving it up to 5. Let's see how that when that actually occurs. We certainly want to grow it, but I don't foresee us kind of coming to that, being on par with our market. We're quite conservative when it comes to how we do advertising revenue in our games, and I don't foresee that we would change that dramatically, and then you kind of limit your potential in that sense. On the other hand, you maximize the potential on the in-app purchase side. And that's certainly a discussion that we have. But so growing from here, I think the other part that we're very proud of is the development of the G5 store. So in the Q3 report, we said advertising and G5 store combined was more than 5%. G5 store, which was launched summer 2020, has also grown month to month ever since, with one exception. It was 1 month where it didn't grow, and that continues to grow. And the margins there are much better. Then we're getting comparable to advertising revenue and the gross margins that you see there. So the combination of the two is quite interesting, and where the G5 store is focused on in that purchase part, and then you have advertising revenue, but both give the kind of gross margin expansion that you want to see. So we certainly expect both of those to grow as jointly, but probably that G5 store will outpace the growth, so it will grow faster. And let's see where the kind of limit is there, but it certainly looks very healthy.
All right. Thank you, Stefan, and thank you, the audience, as well.
Thank you.